Welcome to my channel, Dollars and Dwellings. Very often we see people renting their property and then suddenly they decide to move into that property themselves, or maybe they live in one house, now they bought another house, moving to the second house, and the first one became a rental property. And they changed the use of their property from income producing, like a rental property, to primary residence, and vice versa for different kind of reasons all the time. Or sometimes maybe you have a triplex and you're living in one unit and renting another two, and then suddenly you're like, well, I need more space, now I'm going to be living in two units and only rent one. And by that move, you are changing the percentage of rental compared to primary residence for the total triplex. And as far as people concerned in those situations, they're saying, well, I own this property at the beginning of the year. I own at the end of the year. I'm still the owner. I did not sell it to anybody. The only thing is that I change the use of that property and there's nothing I have to do. And they are wrong. Every time you change the use of the property, it considered as deemed disposition of the property and could trigger taxes. You don't see any cash, I know, but you do realize any gain inherent in the property. So for CRA and tax purposes, this change of use is the deemed disposition of the property. It's like every time you change the use, you sell the property at the fair market value and immediately acquire it at the same price. And you know what the disposition of the property means? Exactly. Tax implication and particularly capital gain. So don't worry yet. Let's see what needs to be done to avoid or defer those taxes and to avoid those nasty letters from CRA. There are three things you need to do. First, report the deemed disposition on your tax return. So if you change the use of your property this year from primary residence to income producing rental property, when you do your taxes next year, for this year, make sure to complete the necessary forms. When you tell CRA, hey, I have changed the use, and the change of use taking place last year, it's almost like you're selling your primary residence. Almost the same form are used. Second, you will need to get the fair market value of your property when this change in use has occurred. Ideally, it would be an appraisal report, evaluating your property at the time when change in use took place. Could realtor assessment work? Well, CRA might not accept it, so always better to get an official appraisal report. Third, you need to decide either you report capital gain or you defer your capital gain if you could. That's where the advice of the professional becomes very important. So let's look at both examples of change in use. First, changing from primary residence to income producing, becoming rental property. Since you live in your primary residence, chances are you can designate your property as a primary residence for all those years and be exempt for capital gain. If the property has been the primary residence for only a portion of the time it has been owned, then the gain could still be partially eliminated by the principal residence exemption, but you need to report it on the tax return. Also, you could file an election and say that I don't want to be considered deemed dispose my property. You're probably wondering why we would file this election if we still can eliminate all my capital gain by claiming primary residence for all those years since I own the property. If you don't file an election, once you sell your property, you will pay the capital gain based on the increase in fair market value since the deemed disposition, right? Since you deemed disposal of that property since that time when you changed the use. Without going into details of the calculation, with this election, you could shelter taxes for additional 4 years of capital gain if you have not designated another property as your primary residence during that time. So it's very important. There's an if, right? If you have not designated another property as your primary residence. So it's possible in some cases. Second, let's look at the changing from renting, income producing, to becoming now primary residence. If you've been claiming CCA, you know those capital cost allowances, which is optional to claim on your rental property? Well, I have bad news for you. You will have to pay the tax capital gain as well as recapture when you change the use of this property. If you have not claimed CCA, you can make an election and elect not to deem dispose the property. In this case, the capital gain will be deferred until you physically sell your property. So the lesson here is, if you are renting a property now and you think that in the future you or your family member could move into it, don't claim CCA. But if you did not claim the CCA, you file the selection, you defer the capital gain until the property is sold. So next time you think to change the use of your property, think what needs to be reported to CRA and how and what you could do to defer your taxes. For more tax advice for real estate investor, follow me, subscribe, and like. See you in the next video.